Hey guys, it's Jim from JAGfx.com. Today it's 1st of February 2018. I'm just going to do this video on the SAR method that I've talked about in the past, or the 4 lines method, depending what you want to call it. SAR stands for stop and reverse. I won't probably go through the actual rules of the system itself or the method itself on this video. However, I will put links to previous videos I've done in the description below this video, so you know if you want to go back and have a look at other videos. So I've had a few ideas about how I'm going to run with this, and I've discussed a few of those ideas on the Facebook group and had a few comments. Thanks very much for that, guys. I know it is of some interest to some people, and it's something I want to take further. I've been looking at this for years, so it's something that I'm pretty familiar with. And I do apologise if it's a little bit confusing or I rush through it pretty quick, but I just want to run a few sort of ideas on how to manage trades. So I'll just give you a quick reminder. This chart here is the silver daily, so it's a silver against the US dollar on the daily chart. We've got a start point here. It's roughly 2016, and as emails come in, 2016. And I'm going to use this as a start point. So remember, the blue line is the entry level. So say we got in down here somewhere, and these yellow lines are what I call the working lines. And sorry about that background noise. You're going to hear the local bike vendors going around their motorbikes with their speakers selling rice cakes and everything. If they park out the front of the building, you'll hear it all night. And the red line is what I call the stop and reverse level, or the SAR level. Now, the MACD Platinum is one of my custom indicators that most of you are aware of, so that's the only indicator on the chart. I've decided against the QMP filter, so there's no red and green dots on the chart itself. So I'll just run through what I'm looking at. Now, assuming we started somewhere to the right of this vertical line, we've gone down, and here's our low here. But in the meantime, I'll just get rid of this vertical. What I'll do is I'll just zoom out a bit so it makes it a bit easier. And I'll get rid of this line so it's not confusing. Yeah, okay, do that right. Alright, so here's our low here. I'll just put the crosshairs on, but see how we had a blue dot. Now, I probably should have mentioned, there's a couple of things that you make assumptions when doing this using the MACD Platinum. One is, if the MACD Platinum is below the 0 level and we have a blue dot, then we're predominantly looking to buy. If we've got a red dot above the MACD Platinum 0 level, we're looking to sell. So blue below, buy, red above, sell. So that's an assumption we're making. It doesn't always work that way, but that's what we're looking to set up. All right, let's go back to where we were so we can find it here. There it is here. So what I'm looking at, we've had a blue dot below the MACD 0 level down here where the crosshairs are. Now, say that was our entry point, that blue level. Probably the first thing I'll be looking to do is just bring not so much the SAR level down, but at least bring a stop, hard stop. So it's at that stop is at least break even. Worst case scenario, break even. So I'll just put that back up where it was roughly. So that's one scenario. So as soon as we get a blue dot below, look for, if we can, if the trade's in our favour and it's a little bit of a distance away, put a break-even stop, worst case scenario. But in this case, with the blue dot, now I've been talking about fractals. I'll explain what a fractal is in a minute. But on the blue dot, there's nothing obvious sort of behind us. There's a couple of little ones here. You could probably bring your SAR level down, say, to those highs there. But then we have this little high spiky candle and it drops away again. So to me, that would be move my red line down there. That's my SAR level. I'll just probably probably better like that. It might be a little bit tighter, but it's easy to see. And look, and the worst thing about doing it this way is I can see what's happening to the right of me. So I've probably got that bias subconsciously that I'm sort of following, but I can tell you now, there's a blue dot down here. There's a bit of an up, what I'd call a pullback, and it resumes a downtrend there. We continue with the yellow lines, so they're down there. So we'll just continue on from here. So we're in a sell trade, we've locked in profit. There's our entry, the red line's our stop and reverse. So it breaks through on this big candle here. So remember the rules, we just bring the bottom yellow line up, bring the red line down, and the blue line to the point of entry, which is across this top here, and these other yellow lines aren't in play as yet. So we're entry on the blue line, stop on the red line. Our risk is between the red and the blue lines at the moment. So we'll keep on going up. We've got a new high on the candles, new high in that next candle. I'm sorry it's a little bit tight, just makes I prefer the charts at this that like zooming it. So what we're doing now, we've crossed the 0 level in the MACD Platinum. So what we're doing now is looking for a red dot. It doesn't appear till up here somewhere. So keep on moving up, and we'll move up. Now remember, one of the other rules, I'll just zoom out here. One of the other rules we had, and it still applies to a certain extent, is if price goes up, then comes back out of the 4 yellow lines and goes back into the yellow lines like it has here, then that's where I'd move my SAR up. So it'd be that level there. Now this is probably a good example. Now we've got the red dot here, so I'm looking to sell because it's above the 0 level, and as its price has gone up, so it's a combination of both. Prices come out of the 4 yellow lines, and we've got the red dot on the SAR. So that's where I place my SAR. So I'm not going to lose any money. I'm going to make that much between the red and the blue lines because the red line is now above the entry level. But what happens here is we get a, say we'll use that one as a break. I know it's very close. So we've gone back to the downside, so we've taken our profit and we're now in a sell. Yeah, it's a bit tight, sorry about that. There's our entry point just below it. And we've got another low here. We'll get these yellow lines out of the way. So now we're in a sell. Nope, sorry about that one. We're in a sell on this candle here. There's our entry. There's a stop and reverse there. We get a new low there. And even though, as I said before, if we're above the MACD level and we get red dot, we're looking to sell. But in this case, like I said, it doesn't always work out. We've gone back to a buy, so we've taken a loss there. So we're now in buy mode, so that the lines get swapped around. It's my entry point there. So now I'm in a buy. This is stuff you'd know from the other videos if you watch this method. Our risk is between the red and the blue line. So we keep on taking the highs. The MACD's not giving us any other, well, you can see now the MACD's gone to a blue dot above the 0 level, which means we'll just give it a bit of freedom to move. There's no dramas. Nice big move up, nice big move up. Now we've got all 4 yellow lines in play. We're in good profit. You know, there's nothing to stop you taking profit or moving a stop or whatever you want to do. But let's just look at the red line scenario. Red dot scenario. So here we've got a second red dot above the 0 level. Now you could make an argument for a SAR level around, see price has gone up, come down and gone up. That's what I'd call a fractal. We've got bullish candles, big bullish candles, then we've got that bearish candle. Now we've got, look, it's not a bullish candle per se, but it's got a higher high. You could move it up, your SAR up to below that candle there, that wouldn't be a problem. The red dot actually happened on this other one, which would make it pretty tight because it sort of closed there. You could wait one more candle, which is a fair option. So say we waited one more candle and we've got and price goes back up. So there's a definite pullback there. You can see it. It's obvious in the chart. So you move your SAR up. Now, you can look at the MACD and you can see it slowly rolling over, and you can see price isn't making new highs at all. Here we've come down, we've come very close to touching. It hasn't. Had a little bit of a pullback up. Now we're below the zero level here. The MACD's gone back below the zero level here. So we'll just keep on moving along. Still no, we're still in that same SAR level, hasn't been broken yet. Price has gone up, hasn't made any new highs. Price has come down. Now, you could, because we've got a red dot here, and even though we're below the zero level in the MACD Platinum, you've got a nice little sort of fractal there. And all a fractal is when price forms these little rounded sort of highs or lows. There's an actual indicator I'll show you on the MT platform under the Bill Williams, and it's actually called fractals. Now I'll just double click it and you'll see it come up on the, I'll make them a different colour, so I'll make them more red, so you can see them. And that's all they are. They're just points where the market turns, basically. I don't particularly like this indicator, but what I do for these, what I do for a fractal is just look for any place where it's a turn in the market. Now it's not always obvious. See price has got, I'm pretty sure this video will show a highlighted cursor, but see how price has gone up here, then it's pulled back down, then it's gone up again. To me, that low there's a fractal, what I'd call a fractal or a pullback. So here we've got this little rounded sort of fractal, like it's come down and it's gone back up. So it's an obvious little pullback there. And we've got a red dot, even though it's below the zero level, it's saying the market wants to go down. So you could jam up your SAR a little bit closer to that low there if you wanted to. So I'll just zoom. So pardon me, we're in here at the moment, right? We're in this area here. I just like the chart like it. It's just easy for me to look at. I don't like it when it's zoomed out. Zoomed in. So now we go up again, still not another high, and the market rolls over. So we just reverse everything. So we're just trying to. So we're in a buy now. I can probably put a couple of these yellow candles on here quickly because you can see what's happening. And we've got another one. So we're going down, and we've got another one there. And we've got a blue dot below the zero level here, and look at that. There's a perfect little, see, prices come down. We've had that little spike candle up. I don't know what you call those sort of candles, that one there. And prices sort of rolled over again. You want to make sure you don't lose anything on this trade anyway. So there's your SAR there. And I can tell you too, there's a gap to be filled there from the weekend by looks. So that's got to be filled. So you're assuming it's going up. MACD's below the zero level, and up we go. We've got to take a new buy. We took a profit there. We're now in a buy trade. So we're going up and we're going up. Now let's have a look. We've got a MACD's gone through the zero level, and it's red dots down here somewhere. So going nowhere. Now, so that yellow line's out of play. Prices come down. In here we've got a red dot. You could bring it up there if you want to move it up there. Price has gone up again. There's your blue dot. We've gone back through the zero level. We've got another red dot there. We couldn't get a break-even trade on there anywhere. They've never presented, so we've got to stick it with the same trade. Price has gone back up. Now just see where this red dot is. Red dots on that candle there. So that's on this candle here. Price comes down. There's no obvious place to move my red SAR line. Price comes down, has a little bullish candle there, and it goes up, spikes up. So you got that little rounded. To me, that would be enough. It just reduces my risk. So my risk is only between those trades now, and we can see what happens. It's perfect. So we go down. We're now in a buy. That goes up to that high there, I think it was, wasn't it? No, it doesn't matter. So there's our entry point. These three yellow lines are out of play. Sorry, that's our entry point. So there's a risk between our red and our blue. Now we're in a trade, you can see what's happening here. Going down, MACD's going down below the zero level. And we get, right, now a couple of things happen here. Where are we? So we've got one of the other rules. Price has poked its head out through the top of the yellow lines. You could consider that area. Then we've got a blue dot here, so we're looking to buys. That would definitely be the area. See, it's just prices come down, then prices gone up, then fallen away. So it's a little, just like a little rollover. It's an obvious sort of trend reversal, I guess you can call it, or a pullback. So that's, now we're locking in profit between the red and the blue line. So we can go through this again. We crack the red line, so we're back in a buy. Move our lines again, so we can get all, and all the lines are as a visual aid, just to give you an idea where you are on price, and it gives you a gauge how strong the moves are by the width between them, etc. You could probably get away without using them, but I just find them easy. I've always used them. So here's another example. We've got a red dot here. Look at that. On that same red dot, prices come down. You could put in a break-even stop there, which would be just above the blue line. But wait one more candle, look at that, there's a little fractal there. Oh, you could have picked either of those candles, prices come down and gone up. It's obvious. So you're locking in a little bit of profit, price drops like a rock, you're back in. So that's the gist of it. And you can see everywhere that price basically follows. I'll just, don't worry about the lines for a sec, because you know how the lines work, but I'll just see if I can show you examples just by skimming through the chart here. Just follow the crosshairs. Pardon me. So it would have been a buy here on this blue dot somewhere, so your fractal would have been across that top there somewhere. Wouldn't have got you very far. But then we've got a red dot here in that area on that candle there, so you would have been short across that bottom there. The price comes down, got a blue dot there, look to your left, and you could probably say see how price dropped down quickly on that big candle, sputtered, had that candle there's come down, price has gone up. Even though it's not technically a bullish candle, you can see it, so it comes down, goes up, and comes back down. That's your fractal in that area there, across the top of that candle. So it catches that high. Now, let's have a look here. Got a red dot, so we're looking to sell, and price just keeps on going up, so your fractal would be a low across that low of that candle. You could even move it up there as price continues up. See a little pullback there, move it up. And the thing is too, once you get in profit, you can give your trade a bit of room to move. Ideally, what you want to do is reduce your risk as soon as possible, which means get the blue line on the other side of the, get the red line on the other side of the blue line, either break even or in profit. Then you can give your trade a bit of room. So if you didn't want to move it up to there, and we can see what happened. So you would say you're taking out there, if your SAR be here, you'll be in there, and it reverses and you're back in another trade to the upside. You get a red dot here. The only place you can sort of move your fractal is up to that sort of point there, but then you have that little spike up, so there's your new fractal point there. Follow the trade up, little pullback there, and price resumes, there's your new fractal point. Price resumes, and that's what would get you in that level, would get you in that down trade. So if you're in the down, now we come down here. This one's a little bit tricky. You got a good move down, and your blue dots on that candle, that big bullish candle there. There's no real area. You've already sort of passed that fractal, so you're above that. So that's how you set your SAR there. You could wait one more candle and it drops away. You could probably place it across that high there and go again. And this pair, the metals are great. You just look at the flow and the charts, they're just nice. So that's it in a nutshell. Now, so what I'm doing is basically using the dots on the MACD Platinum to give me clues. Now, like I said, there's other things you can look at. You can add your own indicators. I know this will be really confusing for a lot of people because you're wondering what the hell's all these lines, what am I doing? How did you go from buy to sell, all that. I'll put the links to the other videos on there. I just wanted to get something out to show you what I'm looking at with regards to the rules and the setups I'm looking at on using this method. I just want to keep it as simple as possible to complement my high probability method. If you look at something like, say, the Aussie at the moment, where is it? Don't know what these lines are, but now the Aussie I stuck in a sell in here somewhere on my high probability trading, and I haven't had a QMP. Like, you have a look at it. Where's it? Got that many indicators. So I put my QMP filter on, and that's where I took the sell there, and see prices just going up and up and up. I've taken another sell up here, but that high probability, the 4 lines or the SAR method would still have me in that trade. Basically, you know, you look at the red dot there, there's nowhere to place a SAR. I would have followed up there, my SAR would be there. It's gone up, gone up. There's another sort of pullback on that candle there. I could have probably pushed up to there. So while I'm losing on the high probability short trade, I'm making money on the 4 lines SAR trade. And I'd be probably, I would have had my SAR probably in this area here. Price went up, come down on that candle there, and then gone up again. So I think I'd be taken into that short now. But hopefully that makes some sense, guys. It's just about using a bit of common sense, really, and don't get too caught up on all the rules. Even though I've got rules, you can be flexible, use a bit of discretion, use your old gut feel, your instinct, or whatever it is, or there's just enough profit on the table, just take it. Anyway, I hope that makes some sense, and I'll get this video posted hopefully tonight. Cheers.